And you started when you were talking, we're going to get into this, but snowboarding was kind of your first hobby, first love?
For sure.
And then you more or less, you do it, but you don't have the same love for it anymore. You don't do it as much.
Yeah, I still do it, but only like once or twice a year. It's just such a commitment. Got to get all the gear. You got to drive up there. You got to get a cabin. It's like a big thing. But I also did it at such a high level in college where it's like, it's different. Like going up just for a weekend is different than, I would go in the backcountry, get the best possible conditions. We'd live at the mountain, wait for the, 3 feet of powder, take the snowmobiles out and just get 10 out of 10 conditions. So, but I found new hobbies like skydiving and, kiteboarding's a new one. I want to do a lot more.
So you're just talking to you without you needing to say anything. It's obvious that you love travel. You're constantly seeking new stimulus, something that's challenging you, that you enjoy, and that you seem to be a flow junkie as far as I can tell, just based on the sports you're picking.
For sure.
Challenge you, and there's inherent risk to what you're doing.
Yeah, I do think it's very important for people to have sports or hobbies that they're also pursuing.
Yeah.
Because when you get that feeling of progression or like hard work into something and then feeling that progression, it's contagious into other things, into relationships, into business. And so
Beautiful.
I've also kind of noticed, or I've met some people throughout my life where if they don't have those recreational things that they pursue, they can just like be a little bit unmotivated. And like, I think you shouldn't just get that from business. You should have some recreational where you're really pursuing. And so I get that from skydiving and other things like that.
I 100% agree with you. That's something I talk about with all my clients is get a hobby. One of the easiest ways to keep yourself from getting burnt out is to have something that forces you to disengage from your work, even if that is your passion, that's what you're in love with, something that's going to force you to grow and develop and gets you to disengage from whatever you're doing. And sometimes it needs to be something like skydiving or something that's intense enough that it's going to force your brain to be in that moment and be 100% present with what you're doing because it necessitates that you do it.
Agreed.
So,
even as simple as going to the gym, picking up running or paddleball, like it can be very simple, but I think there needs to be something to keep you stimulated outside of work. And I also see people sometimes when they, retire or they get older and they're kind of wrapping up the business stuff and they don't have any like specific hobbies. And if they're not like pushing that, then they can feel like they lose a bit of purpose. I've seen.
Jack McColl, excited to have you on the show, brother. Good to see you.
What's up, Sebastian? So good to be here. Really appreciate it.
Oh, man. It was a couple months ago. We met at one of my mastermind dinners, and you showed up. And wild, I don't think this has ever happened to me before, where I literally am talking to somebody who grew up in the same small town I did. And I still tell people about it because it made me laugh so hard as we were explaining the same place we grew up the same way that you would to somebody that doesn't know where Squim is. You're like, oh, yeah, a little bit out of Seattle. Well, we're out of Seattle. 2 hours west of Seattle. Well, yeah, where? Have you heard of Port Angeles? And you pivoted to Port Angeles first. I don't blame you, the biggest city in Clallam County. And like, no way. And so you graduated 8 years after I did, but from the same small high school.
Very small.
Which is wild. I think I had 154 people in my graduating class. You said you had a few hundred.
200.
Yeah. And it's a small world. Reminds me of so many things. But
yeah, and it's such a special connection because, we're down here in Los Angeles building our businesses. You've created an incredible company. I just walked around your office. It's super inspiring, incredible. And to think that you grew up in the same small town as me is just incredible. It's like we, we're born in the a similar, very small nest in a small tree very far away. And now we're in this massive city doing pretty good things and making that connection. We realized we grew up on the same street, basically, like within a mile from each other, rode dirt bikes on the same streets, went down to the same river, fished the same river, I assume, just incredible things. So you always have a special place in my heart to see someone like yourself.
Thank you, brother. I feel the same about you. It's cool. So I'm pumped to have you on. And I feel exactly the same way. It's cool to see people winning that grew up where you did and in probably very similar conditions, which is cool. And I've just recently moved back to the peninsula. Super excited to be back out there. That was part of my mission. Was I really have a passion for that area, and I wanted to bring infrastructure, connections, and money there to help develop it in positive ways, not to take advantage of the area or exploit the area, but to bring value there. So I'm now splitting time between Orange County and the peninsula, and it's a hell of a gear change.
That's incredible, man. Definitely inspiring. The town needs it for sure, and you're going to be a great impact out there.
Thank you. I appreciate it. So you left, you started snowboarding. That was kind of your big first thing off the peninsula. And you said you did that through college, and you were really into it at a professional level. Is that correct? Or a semi-pro level?
Yep.
Sponsorships?
Exactly. Sponsored head to toe, competing in a lot of the pro contests, winning some money, not enough money to actually pay real bills, but through college was definitely competing in pro contests, making some money. And that was my hobby for sure. Actually a little bit more than the hobby, but that's what I was doing. I'd move to the mountains every winter for 4 or 5 winters in a row. And that was my thing. And it wasn't until I got injured, I tore my labrum. And literally right after that, when I realized I couldn't snowboard the rest of the season, I got an opportunity to be a marketing, field marketer with the app called Yik Yak, which was blowing up at the time. And so I was a field marketer for Yik Yak, and then became a videographer, making all the content for them. And I lived on a tour bus, and we traveled to 53 of the D1 universities in the Midwest.
Yep.
So that was kind of like my first taste into like having a real job and things like that. And I got really good at content. And then I transitioned that skill into a videography company. And then just kind of fast forward, then I ended up making other companies where then instead of making content for other companies, I would just make really high quality content for my businesses. And that made us have such good branding so we could sell our product for significantly more than our competitors.
Where did you go to college?
University of Washington.
Thought so. Yik Yak, I'm pretty sure I knew a few guys that were part of that too at that same time. That's crazy. Small
Yeah,
world.
we were on the rise. We were a big impact of why it expanded like it did.
So, and then you started a videographer company coming out of that.
Yeah.
And then used that skill to build your own companies, your own social media presence. What were those companies? What were you doing?
So the first one was hoverboards, and this was we were so early to it. Someone I met at Yik Yak named Jared Getz, great entrepreneur.
Literally was just about to ask if you know Jared.
Yeah, so Jared Getz, we got in business together. He was importing like 10 at a time from China. I had 15,000 followers at the time on my Instagram, which was kind of a big deal at the time. It's so long ago. And he's like, yo, help me sell these. Ultimately, we got in business together, 50-50. We started to import batches of 50 at a time, et cetera. And then I used my videography skill set to make just the most epic content. Like we made the brand look so good, made it look like Beats. And so we were selling our hoverboards for $1,200, buying them for $400 when competitors were selling theirs for like $600.
Yep.
So incredible margins. But for us, we were really limited on capital at the beginning. Yep. And the hoverboards were a big fad. So they were only super popular for 1 to 2 years. Yep. And so we could only turn so many rounds of inventory with the limited money that we had, which was $10,000 collectively together. We made money on it, but there was an opportunity cost because we didn't have access to more money. We actually almost did a deal with Mark Cuban. He saw that we were the best brand in the space. He had a letter of intent to, I forgot the exact details, but I think either to acquire a company. I was kind of naive, so I don't really remember the exact language. But we were talking to Mark Cuban. We had a letter of intent from him. And anyways, we stopped selling because he was going to buy the patent from the Chinese patent holder. Mm-hmm. And he's like, in the meantime, I'm not going to do business with anyone who's infringing on the patent. So we stopped selling our hoverboards through the holidays with the intention of doing business with Mark Cuban once he gets the patent. So we lost out on millions of dollars by not selling them through the holidays. It was like the biggest holidays in that fad. And then he didn't buy the patent, and then the fad kind of
So that's a calculated risk. How did that conversation go? Because you literally just missed out on your best season.
Yeah.
And the bet was if he gets this patent, we get to do business with somebody
else. That was the bet. Jared was advocating, let's just keep selling. Mm-hmm. And my dad was advocating to maybe hold back on selling and try to do this deal with Mark Cuban. And that's the bet we made, and ultimately it was the wrong bet.
Those are tricky ones.
Yeah,
Jared's a good dude, for sure.
Yeah, but ultimately we needed the funding because we were strapped. And then at that point we then figured we needed a new product because the fad died, the demand died. Jared had the idea, let's go to China. Let's go to the Canton Fair, largest trade show in the world. Let's go find another product and import it from China, make our own brand, maybe even had the same product under the same brand, but let's go find more products. We go out there. It was a 3-week trip. I'm 22 at the time, I think. Super young, super naive. I'm at this big trade show. We're trying to find another product. And then on the last day of the 3rd week, we found these inflatable loungers that became super popular at music festivals. And you can inflate them with no pump. You roll it up. It's like an air hammock, and then you lay on it. And so we saw a company in Europe that just released that product. And then we saw a Chinese manufacturer that were making them. We're like, this is not in the States yet. Let's buy 10 right now. Let's go to the States, make epic content, and then put in an order for hundreds, have them shipped to us, and then just do the same thing we just did with the hoverboards. Be like pretty first to market, have a great brand, and sell these at festivals, on Facebook ads, things like that. And we knew we needed access to money, which really, like, has fueled my
We're going to get
passion
to how this builds
with credit.
It's helping me see how you got to where you're at.
There was a
which is
progression,
awesome.
which is So basically, we knew we needed money, and we didn't have the money, and so we brought on equity partners. We gave them actually 51% of the business.
Oh, that's fun.
That's very fun. And so at this point, again, I'm like 22, 23, pretty naive, and we give away majority stake of the business. They're injecting some money. They're supposed to put us at all these different music events because they had those relationships. Our contract was weak, and long story short, they didn't deliver on the specific promises, and so we ended up having to buy them out. So it was a very difficult situation picking the wrong partners. But that was the bet for us. It was like the bet, okay, we know we need money, but we don't have the money. And these guys have the money, so let's bet on them. Let's try to work with them. And it burned us.
Very often, it's only when we look back can we understand why we did the things we did, right? And how they led backwards. Them. And that makes, as we're going somewhere with this, I'm hearing this, I'm like, this makes so much sense. And the lessons you're learning in your early 20s can be painful ones, but I guarantee you they've probably have already made you at least hundreds of thousands, if not millions of dollars, because you're learning, hey, the importance of cash flow, which we're going to get into your current business result, learn why it's important to have partners or not have partners. And when you're giving away equity in your company, what does that mean? And what's the impact of that? Or if you're trying to land a big fish like Mark Cuban and playing his game and you're a little fish, it's like, well, what's the opportunity cost related to that? And they can be painful in the moment, but when you look back, it's like, I guarantee you, just listening to the way you're framing things, you've learned powerful lessons from that that's helped you shape your world as it is now. It's also fun for me to hear that story because Jared has actually told me that story from his perspective with a pretty solid, I think you guys said it like the pretty similar ways. So.
Yeah. Oh, that's so funny.
Yeah.
That is so funny. Yeah, no, such a great learning experience. I think anytime you make mistakes in your business, you should be grateful for every single mistake. Because if you're making a mistake on something this big, it's saving you on a mistake from something this big.
100%. I'd rather learn that lesson on thousands of dollars instead of millions of dollars.
Yeah, I welcome mistakes and challenges with open arms. And I really encourage everyone to have the same mindset because it is so crucial. You know, you fail your way to success.
Yes.
Their mistakes are going to come, and you're in a better state of mind if you just welcome them and realize that it's crucial to make those mistakes to get to those next levels.
I share that with my team in that I don't generally get frustrated by mistakes unless they become repeated mistakes, right? Because that means we're not adjusting, we're not learning the lesson, but that you iterate your way to success, which is to fail your way to success. It's you figure out that didn't work. Let's figure out a better way to do this, or you create better systems around something that has a lot of pain. So those are your first two businesses. Where'd you go from there? And I could see, obviously, cash flow is huge in business, and I'm surprised how many business people don't understand that. In fact, a lot of businesses go under because they have more demand for product than they can physically buy, and they can't make the difference.
Yeah. So from there, on the side, my brother and I started a travel company where we organized Cabo San Lucas spring break trips for university students. So that was something we did for kind of fun. We always wanted to bring our friends to Cabo, and there was a company that had this representative program, and we wanted to just mock their program because we had relationships down there. We figured, okay, we should get hotel contracts, flight contracts. Let's go on campuses, sell this offer with college kids, et cetera. Let's just do this ourselves. And so we did it for a few years. On our third year, again, we knew we needed cash flow. We knew we needed access to capital to just move a lot quicker. We needed to buy hotel inventory up front to help with our margins. And we took out a loan. We were paying interest on the loan, but it allowed us to buy more hotel inventory, which ultimately allowed us to take market share from our competitors. And that the big competitor that we were trying to mock, we took so much market share from them that they wanted to acquire us. And so that was just a big light bulb of us borrowing money to be able to scale and move a lot quicker, take market share, and now they're acquiring us. So just more validation, like you need capital to scale.
Which is interesting because there's some very big names in the finance space that would say debt is bad. Stay away from debt. Right? And obviously, there's no way you would agree with that. But your story is a perfect one of where if you're using debt in the right way, it ensures success, or at least massively improves success. And so you were able to leverage other people's money, OPM, to then you were successfully bought out.
Yeah.
So tell me about that. What do you think about when you think about that? When you hear people teach, there's some very big guys that would say debt is bad, don't ever go in debt. What do you hear when you hear that?
Debt is a tool. You can absolutely wreck yourself. You can ruin your business. You can ruin your personal life. And you can do the same thing with a gun. You can put a gun or alcohol, and you can put these tools and resources to really good use, or you can set yourself up for disaster. And so, anytime when you're leveraging other people's money, there is a risk involved. And so you want to take the precautions to make sure you're spending and allocating the money properly. But when you study really successful business owners, most or all leverage debt. They leverage other people's money because you can use that as an amazing tool. John D. Rockefeller, who monopolized the oil industry in the 1800s, he had really good relationships with banks, and he leveraged those relationships to acquire his competitors. When you look at other people I've crushed in business, like Grant Cardone, Donald Trump, like all these individuals have crushed it leveraging debt. But you do have to be careful, and there is a significant risk.
So when you look at using debt to invest in a business or to grow a business, what factors are you paying attention to that let you know this is a good bet or this is not a good bet? In other words, when would you use credit? When would you not? When would you go, nah, it's not worth it?
So I think specifically when you use money on credit cards or business lines of credit, when there's interest potentially involved, you need to look very clear on what the return of the money back to the card looks like. And so like real estate, people who fix and flip in real estate, I think that's a great model to leverage these 0% interest business credit cards that we'll start talking about soon. But the 0% for 9 to 18 months, and real estate flippers can often do a flip in 3 to 6 months. So if they can use that money, invest in the deal, realize the profit, and then pay off the card, or rinse and repeat 2 times in that cycle, it's a very clear line of like how the money circulates. And so you don't want to use 0% credit or business credit cards for long-term investments, like long-term holding real estate. Right. It doesn't make sense because there's not a return of the money back to the card. So I think you got to look at the model and think about, how can you realize the profit and then pay off the card. And, there's a risk. But I do think that when you have access to more money, your chance of succeeding increases. Yes. It does raise the stakes, but I do think your chance of succeeding increases. And also when your back is against the wall and there's pressure, I do think you're going to perform much better.
Yeah. Depending on how you're hardwired, I would agree with you. I was going to interrupt you to say sometimes people seem to do better when their back is against the wall, but I've coached enough people to know not everyone is hardwired that way. But I think for a lot of the killers and the high performers, they tend to thrive in those environments. So you sell your business to a competitor. You have the travel bug, right?
Yeah.
And then, so what's your next move? What do you do from there?
So I ended up working for that company.
Okay.
It was called Pollen.
Yep.
And basically I was an outside sales rep, and I would manage the highest revenue universities on the West Coast. Okay. So I was still doing the same thing, which is selling college students on coming down to Cabo and having an awesome spring break trip. And I would organize, organize the leaders of each campus as a representative team. And so I only worked for them for about 1.5 years because I was learning so much.
Now, did they bring you on? Very often when companies acquire the companies, they ask the principals to stay on for a period of time. Was that the reason, or was it like, no? So
we actually killed our brand. We killed the brand that they acquired.
Got it.
But the reputation was there. It was mainly an acqui-hire. It was called acqui-hire. Yep. They really wanted us and not our competition.
Yep.
So they brought us on board, put us on the highest revenue campuses where we had influence. And again, like the only reason I worked there because the money was good. It was we were making over 120 grand, 130 grand several years ago. So it was good money. A lot of it was commission based. But really why I was working there was the skill set I was refining. I was on these campuses with, good budgets behind me, organizing dinner parties for these top representatives at these schools. I was recruiting the top leaders from these campuses. I would pitch them at a dinner meeting in front of 20 to 40 of these campus leaders. So I was getting better at, public speaking, recruiting, sales, things like that. But once it got to a point, and I think this is a valuable lesson for me and a lot of other people, is like once you're in a work opportunity and it starts to become repetitive and you're not learning anymore, that I think is the cue to do something else.
100%.
And so I had a very good boss that I was working under. I was learning so much from him, great experience. But once it started repetitive, I was like, this time to go. At that point, my brother and I, we moved to Bali, Indonesia. We're like, let's just switch it up. And I do think when you're on transitions between work opportunities or businesses or relationships, I think you got to reset. I think it's a really good idea. It's a great opportunity because when you're locked into a business, locked into a relationship, there's, sometimes there's not much flexibility there. So when you're in a transition, go take advantage of that and go travel for a week or two or 4. And so that's what we did. We went to Bali and we actually started an Airbnb arbitrage business in Bali. Sick. And we had several villas. And I was going pretty good.
What year was this? Your time
2019 to 2020.
Oh, sick. Well, that's a wild timing.
And it was sick until
COVID.
The big COVID. And so we're back in the States now and realized that no one can travel to Bali because,
it crushed. I have friends there and they got crushed.
Yeah. So
it got really bad.
That crushed the business. And I realized I needed to get into something that is going to thrive with the COVID economy, and that was for me e-commerce and something in consulting or like an online info product. At the time, I was already pretty good with credit cards. I was learning about credit cards. I became fascinated with the points. They realized you can get a lot of money approved with these 0% business cards. Mm-hmm. And what just absolutely blew my mind was you can get approved for business credit cards with no income verification, and those business cards don't report to your personal credit profile. So you can max the cards out, use the money for your business, and your personal credit score stays pretty much unaffected.
Yep.
And so that blew my mind, become super fascinated. I started to put together a program. I was teaching people credit for free at first, just for like trying to get like video testimonies, some credibility. And then what really ramped it up for me is I was able to get in touch with these high-level business relationship managers, which are the bridge between the consumers like us and the underwriters. Mm-hmm. And so these business relationship managers know what the underwriters are looking for. And so I asked so many questions to these relationship managers over a phone call. And it's not really information they can just text or publicly talk about. Phone call, in-person meeting type stuff. Yeah. And so I learned so much about the underwriting process. And I knew it was possible that you can get approved for several hundred thousands of dollars with no income verification on a brand new business, doesn't affect your personal credit report aside from the inquiries. And I just reverse engineered the whole process, and I did it on myself, and I was learning as I was teaching other people, et cetera. And I realized that like if I didn't know this for 7 years of entrepreneurship, so many other people probably don't know about it as well. And I was right. So I took a big bet on that. I tripled down on investing basically all my time to figuring out how to just really crack the code on these massive limits on these cards. So like $50,000, $100,000 cards on these 0% interest business credit cards, 0% for 9 to 18 months, and really put together a program where I teach it. I teach people the skill of credit so they can go to the banks, have confidence to know what they're doing. Because when you study how to build strong credit, it's all vague.
Yep.
It's all super vague. The banks don't want you to have good credit because they want you to pay interest, et cetera. And so I'm here to teach people how to build good credit, how to get money from the bank so they can scale in business. And for me, as we've talked about, I never had those resources. I was strapped for capital, and it set me back hard on my first 2 businesses. Yep. And I want to help people with this education. So now in my program, Credit Stacking, I'm teaching over 3,000 entrepreneurs on this exact framework that I've been developing for 4 or 5 years.
That's awesome. We're going to spend some time talking about it, but I want to go back to something you said. I thought it was brilliant. You dropped a couple of gems there. One, especially in your 20s, and maybe this sounds like a privileged statement. Somebody would think it sounds privileged, but I would say seek to work for an education, not a paycheck. Yeah. Right? And you were basically learning how to run a business on somebody else's dime.
Yes.
That is huge. Yes. And you're exactly right. And I would agree to that point. When you get to a point when you're no longer growing or you outgrow the business you're in, that is a good time to exit stage right. Mm-hmm. Right? It's like learn everything you can and move on. Move everything you can, move on. And great employers will generally try to keep people around who are growing by giving them more and giving them more, but work for an education, not a paycheck. Wealthy people, wealth isn't about a possession, it's about a mindset, it's education. And the more I grew up in and around seeing people become more successful and build more wealth, it became obvious to me they looked at the world differently. Right? They had a different frame at how they looked at money. For instance, we're taught very often that debt is bad, but most wealthy people would not tell you that. It's leveraging debt and knowing how to use debt as a tool, as you pointed out aptly. So I love that. So when you look back and you're like, man, had I learned these skills earlier, I would have leveraged these businesses to another level.
Yeah.
And so now you're passionate about teaching entrepreneurs how to do that. And that is in response to, sounds like COVID and everything that was going on there. You have 3,000 students you're teaching entrepreneurs. Super cool. What has changed in the last 4 years and what hasn't in that space? When you look at credit approval, how people are getting approved, how the credit card companies are shifting. I work and consult in fintech. And I just did a video on the Credit Card Competition Act, which I'm very excited about, bipartisan bill. But the game is constantly changing, and I don't know how you feel about, or if you have an opinion one or the other, about our banking system, which to me just seems like it's fleecing specifically American consumers. But when you look at the game, has it changed much for you in the last 4 years? Has the way you're getting people approved changed? Are banks changing? Do you see anything there? Because in many ways, you can tell the direction of an economy by how much liquid cash is available, how easy it is to get liquid. So has anything changed for you, or any observations?
The landscape is always changing with banks. And like originally when I started 4 years ago, right before COVID, when COVID happened, there was an instant shock at first for a few months, but then lending was super good.
Yeah,
it was
we injected
super good.
$8 trillion freaking dollars in the economy.
Yeah, so banks were super generous, and a lot of banks are still very generous, but it fluctuates. Like Chase is still a really good lender. Elon Financial, for example, used to be a really big lender, very easy for people to get approved for big limits. Now it's very tough. But now we figured better strategies out at banks like Truist or Goldman Sachs, for example. So it's kind of always fluctuating. There's new credit card products that come out. We just study the trends and try to test different things, but it's always changing around. But for an early stage entrepreneur, it is certainly doable to get approved for about $100,000 of capital, which is 0% interest. Some people can go in with good strategies and get $200K. Other people are looking at like $50K.
And so how much does your personal credit matter? I know you said no credit, but you're still a guarantor. So your personal credit obviously matters somewhat, right?
Yes. I'm glad you asked. It's actually the most important thing.
Okay.
It is the most important thing, and not just a score. Someone can have an 800 and get denied for all business credit cards because they don't have an optimized profile. And so there's many things that the underwriters are looking for. And it needs to be a certain amount of accounts, a certain amount of personal collective limits on revolving personal credit cards. And so that's something we always do and teach, is first optimizing that personal credit profile.
So you're working on your personal credit. So I'm glad you brought that up. So you can teach somebody how to raise 100,000, 200,000 pretty regularly, but you do need to have a solid personal credit profile to be able to do that.
Yeah.
And as you pointed out, and 100%, the business credit card won't report unless it goes bad. It won't report to your credit, so you're not impacting your personal credit by doing it. But you are still on the line you're the guarantor for that, so you want to obviously keep that in mind. What are you teaching your students to prepare personally to get business credit cards?
So the first thing we want to make sure is there's clean payment history. So if you have negative late payments and collections, you want to find a credit repair company that can get those removed for you. That's first things first. Next, we want to look at your balances on your personal credit card. So on each account, under at least 30% utilization, ideally under 10, and not just an average, but on a per account basis. That's going to give you your best score. And then really we want to look at the average age of your profile. For most people that are a little bit older, they probably have a good average age, but you want to have at least average age of 2 years. And if you don't have the average age, you can get added as an authorized user to someone else's card that reports on yours as an authorized user, and it increases your average age. So if that's all in check, now we're looking at the amount of accounts you have and the type of accounts that you have and the limits on those accounts. So I always recommend people to have at least $15,000 of collective personal credit limits on primary cards. So not the authorized users that we just talked about, but primary credit card accounts. And so if someone has only $10,000 of collective primary credit limits, I'd recommend to apply for another personal credit card. Let that report first before doing business credit.
So 15 in total or 15 per?
15,000 collectively.
Collectively, that's what you mean.
On like the
Okay.
bare minimum.
Yep.
Like 40 to 80,000 collectively personal credit limits is best.
Okay.
It's actually interesting. If you're over $100,000 of personal credit limits, it's actually a negative thing. And Chase won't approve you for a big limit if you have over 100,000.
And personal.
Yeah. So quick side note, if you are over 100,000 of collective personal limits, I would manually reduce some of those cards.
So can you just call in and ask them to remove? Like,
exactly.
Okay.
Exactly. I've seen it's crazy, but you want to be under 100 collectively. But so to get really big collective limits, you want to focus on the banks and the cards that give high limits. And so some of my favorite, and you want to do these at tier 1 banks, because tier 1 accounts look better on your profile than like a tier 4 like store card, like Sephora, Victoria's Secret, Cabela's.
Yep.
You don't want those for sure. You want to focus on the big banks like Chase, Bank of America, Citi, Wells Fargo, American Express is good too. But some of the ones I always recommend is the Chase Freedom Unlimited, the Chase Sapphire Preferred, or the Chase Sapphire Reserved.
Those are personal?
Yeah, these are personal. Okay. These are tier 1 bank cards that give out good limits. Okay. Another one I would add is the Built credit card. This card you can pay rent on and earn points when you pay rent on this card, which is great. And you can transfer them to American Airlines and Alaska Airlines, which is a very valuable perk of that. And it's issued by Wells Fargo, so it's a tier 1 bank and looks good on your profile.
No way. I've never even heard of that card.
It's a really good card. Yeah, cool. Built. Getting one at Amex is a good idea in general, and getting one, I would end the list right there.
Why Amex?
Because they're very relationship-based, yes. And so if you can build a relationship with them, either on a personal card or a business charge card, then when you apply for a 0% card with Amex, you're going to get a much bigger limit.
Got it.
And American Express is the only bank that allows you to move a limit from a personal card to a business card. So here's why why it's key, is because if you get approved for a $20,000 Amex Delta Gold, for example, which is a card I recommend, Amex Delta Gold, $20K approval. And then on the business side, you get a $20K Amex Business Blue Cash. You can move the limit, some of the limit from the Amex personal card over to the business card. Now you have more 0% on a business card that's not reported to your personal credit profile.
Beautiful.
So that's one reason I recommend Amex for sure.
And Centurion Lounge, if you're a traveler, are amazing.
Yeah.
For the most part.
For sure. One thing I'll mention, though, because I just listed 5 cards, that doesn't mean go apply for 5 cards today. You need to be super strategic on the personal accounts you apply for and in what and on how many you do in a specific time frame. So if you apply for more than 2, or actually if you get approved for more than 2 in a 6-month window, it's going to set you back on future applications. You only want to do 2 in a 6-month window or 4 in a 12-month window. But you do want to keep applying for personal cards to build up that collective credit, because to get a perfect 850 score, you need over 20 accounts reporting in general. So you do over time want to be applying for more accounts throughout your life, but you want to be strategic because you want high limit cards from tier 1 banks, but not too quick.
So if I'm hearing you right, you're saying is you're setting this up, if you went on and applied with every tier 1 bank at the same time, that would probably hurt you more than help you.
It would set you back for a year.
So
you will not be able to get approved for any business account for a year.
So how would you do it then? You apply at Chase, see if that resolves.
Yeah.
You get a card, wait another 3 months.
Or you can do 2 at the same time, but 2 max in a 6-month window.
Okay.
So how I teach people, if they come in, they only have 5K of collective limits, and they're like, I really want some business credit. Okay, first, we're going to see how many personal cards they've been approved for in the last 6 months. If it's like 0 or 1, cool. They can afford another card right now. So I would recommend one of the Chase ones I recommended, like the Chase Freedom Unlimited, great card. And wait for that approval. Cool. You got, maybe it's a 20K approval. So now they're at 25K collective. I wouldn't do another personal one yet. I would save it for 3 or 6 months. But if that Chase card came at 5K, now they're at 10K collective, I would do one more.
Okay.
So maybe the Built
50K
card.
50K like you were saying.
Yeah. Yep. So they get out to 15K, then go to business.
So time-wise, as we're kind of running up here, which I like because this is pretty congruent with things that matter, it's not happening overnight. There is a time horizon to this, right?
Big time.
If you're building something from scratch. Have you ever thought, maybe you did this and I'm just not aware of it, have you ever thought about taking like a random follower of yours or somebody that is really excited about it and like documenting their entire journey and like being their financial guru and like take them like and then documenting the entire process
It's a good idea.
That would be
haven't.
really cool.
We actually talked about it, but we haven't done it yet.
Yeah, that'd be sick.
Yeah.
So,
but real quick, there's definitely a timeline. For some people, they're ready for funding right now, but the chance is low. Like there's generally some stuff you got to do. And for some people that really haven't thought about it, maybe they didn't know how to do it, which it's not really taught anywhere. Right. I don't blame people for not knowing.
Totally.
There's usually some work you got to do. And so that sometimes that's a month, sometimes it's 3 months. If they're from scratch, sometimes it's 12 months.
So if somebody's ready to move right onto the business credit, correct me if I'm wrong, they should already have a pretty solid credit score, and that's over 700, 600?
720 plus we really like to see going into business funding.
Okay. Over 15,000 in collective credit card limits. Mm-hmm. And then, was there anything else? Was that it?
I like to see at least 3 primary credit cards.
3 primary
credit cards. So the 15K collectively.
Over 2 years of time.
Yeah, exactly. So the 15K collective primary limits, the 2 years of average age, and at least 3 primary credit cards. So that's what I like to see.
If you're already there and that part's prepped, then you're ready to move right onto the business side.
That's the bare minimum, but yes.
Okay. So tell us about the business side. Then what does that look like?
So I would first highly recommend to go open business checking accounts at Chase and Bank of America.
Okay.
Chase, you pretty much need one to get a high limit business credit card. And I would recommend for everyone to basically do all your banking or majority of it at Chase.
You don't get paid by Chase. You're not a spokesman for Chase.
I don't get paid by Chase. Zero financial interest in saying that. But Chase is the best.
Why not Bank of America? Why not Wells? You mentioned Bank of America.
So Bank of America also, because they're very relationship based, and if you don't have any banking relationship with Bank of America, you won't get approved for the business credit cards. So I do recommend them as well. But Chase is the most lenient on shelling out cash, but they do require a bank account for their high limit cards. And Chase is really just the best platform.
Okay.
There's the most branches. The online app is just the easiest. There's more features. If you get charged an annual fee and you don't want to, you can ask them to waive it or downgrade you. Just like a small note, 2 small notes. At Chase, if you go into a branch and ask for a sheet of checks, they'll just give you a sheet of checks for free. If you go to Bank of America and ask for a sheet of checks, oh, sorry, you got to order them. It's going to take a couple weeks.
If you go to Wells, even if you're a premier banker, they're going to charge you freaking $3 to print your checks for you.
So that's like one small example. Another one is Capital One. I got hit with an annual fee.
I was going to ask you about Capital One because I like Capital One, but what don't you like about them?
A lot of Capital One business cards report to your personal credit profile.
Oh.
Like the 0% business card at Capital One reports the personal.
I didn't know
it defeats
that.
the purpose.
Right.
The Capital One Venture X business card, hard card to get approved for. There's like a 300,000 point sign-up bonus, which is incredible. I got denied for it twice, surprisingly, with a previous relationship on a Capital One personal card and an 826 score.
Wow.
I helped a friend get approved for it, but it's a hard card. Anyways, why I don't like them, I think they're really good. I just wouldn't prioritize them in the funding sequence or even building personal credit. Because one reason is when you apply for any credit card, the bank is going to pull from either 1 or maybe 2 bureaus.
Yep.
Usually 1.
Yep.
Capital One pulls from all 3.
Oh.
Gives you 3 inquiries, 1 on each bureau.
This is good. This is good information to know.
And so I think the Capital One Venture or the Capital One Venture X personal cards are great everything spend cards. Like I'll do my dining on the Amex Business Gold, I'll get 4X.
Yep.
My travel on the Inc. Preferred Chase or the Chase Sapphire Reserve, I'll get 3X. Anything else, the Venture X gives you 2X points. So it's the best everything card, like
so
for
if
everything
you're not
else.
Putting food and travel on those 2, everything else goes on that card.
Exactly.
Yeah.
And Capital One points are very good.
Yep.
And we'll get to points. I want to talk about credit card points.
Why not Wells Fargo?
There's so many little side notes here.
I know.
So funny.
It's good stuff. I enjoy it.
So when you get charged with an annual fee, so one thing I'll say is you never want to close personal credit cards because more accounts, the better. The age is better. All the things are better. But sometimes people don't want to pay for the annual fee and they want to close it. Yep. What I would recommend is to ask them to downgrade you to the free version of the card if you don't want to pay the annual fee.
Yep.
Still keep it open. Just go to the free card and then put a subscription on it on auto pay so that you're using it. They don't close it.
Right. Yep.
Highly recommend that. But with Chase, if you get charged an annual fee, you can call them within 30 days and say, hey, I just got charged the annual fee. I don't want to pay it. Can you downgrade me? And they'll give you the credit and not charge you, and they'll downgrade you. At Capital One, I had plans to downgrade from the Venture X to the Venture because I still get 2X points, but I don't get the travel benefits, which I already have on like 3 other cards overlapping. And so I forgot to do it before it charged me. It charged me. I called them and said, hey, I want to downgrade. can you refund the charge? And they said, oh, no, it already charged.
Thus, they don't make it on your list of recommended banks.
Yeah, so that's just another like one of the small things of why Chase is superior.
Yep.
It's just the best user experience by far. Bank of America online banking is very confusing. So I couldn't recommend to people enough, bank at Chase. You do want to bank at Bank of America to build that relationship, but Chase is the best.
And why not Wells?
Wells is pretty good. Right now, they don't have a 0% interest business credit card, which is really what I advocate to people.
Yep.
They do have a business line of credit, no docs up to 100K, but really no docs up to 50K, which that means no proof of income, no financials, no tax returns to get the business line of credit.
Yep.
And so business line of credit, I think, is a really cool product. It does come with interest, but you do pay interest when you're using the money. And so it shows up as a bank account, and when you pull money from it, then you pay interest on it.
It's reverse, yeah.
But it's incredible because it just shows up as a bank account. Like on a credit card, like there's ways to get the cash off the card, we call it, to pull the credit into cash. But with a business line of credit, it's just right there. You just transfer 10K, 50K, super easy. So I think Wells Fargo has a really good business line of credit.
Yep.
And so a banking relationship will help get you approved for one. But outside of that, there's not much more going on.
They just don't fit into the profile of what you're doing, sounds like, because you don't have a 0%. And
there is a new one coming out soon from them. I don't know when, but it's coming soon.
You're excited about?
I'm excited to see.
Okay, cool. Bank of America, I won't touch because I lived through the 2008, the Great Recession, and I loved Bank of America up until that point. And then I had a sizable amount of cash in, it was well into the 6 digits. I was sitting in a checking account, and I had a line of credit with them. I had a credit card with them, and I think my car loan was with them, if I remember correctly at the time.
What happened?
2008 happened, and I go into my bank, and all of my cash was frozen, and then it went away. And I was like,
are you kidding me?
They covered their debt with my cash, not because I was delinquent. I didn't have perfect credit. I wasn't behind on anything. They were overextended. So I called the banker, and the banker goes, the whole world's on fire right now. All financial institutions are getting crushed. We're trying to protect our bottom line. We were overextended. So they force paid my cards with my cash. So I went from, I can write out.
They paid off your cards.
Correct. They basically paid off all of the debt I had with them.
Wow.
With my cash.
Wow.
And it sunk me. It was, because I think in 2008, we'll be in a recession 6 months to 18 months. It's going to be rough, but I've got enough cash to ride this out. I'll be fine. To literally, they were the only ones I banked with. One of my lessons, I don't ever bank with just one now.
Smart.
And I went to an attorney, and it was 2008. They're like, this is happening everywhere. And I'm like, how is this legal?
I know.
And if you look at the fine print, to this day, all of the banking, which is why I'm not a big fan of, and I get you're going to get better limits to your point, but I'm not a big fan of having your credit tied to the same companies that also you hold your money, because they can legally hold back your money, unless something's changed recently and I'm not aware of it, to pay off debt, whether or not you're delinquent, just to cover themselves.
That's crazy.
Yeah,
for sure.
That was 08.
Pretty savage move on their end.
Dude, I mean, when we look back at it, 2008 was the gnarliest financial crisis since the Depression. Sadly, I highly doubt it will be the last, but it was brutal.
That's crazy.
But it wrecked me, so I won't touch Bank of America anymore.
Yeah, respect. I respect the decision, but that's wild. Savage move. I'm gonna pay this guy's debt off with his money without his consent.
Without his consent, I didn't think it was legal.
Yeah.
I reached out to an attorney about it. There was class action, but it was, again, if you think about that time period, huge banks were collapsing.
Yeah.
So I get
survival mode.
Yeah,
that's crazy.
Survival mode. It was interesting. Okay, so now we're gonna build business credit, and which card are you going after first? Then all the other conditions are met. What card would you recommend? What's your first kind of intro into that kind of cascades into this $200,000 venture?
So a lot of people, if you want a really good limit right off the bat, I'd go to Chase.
Yep.
They're the most lenient.
And you want to open a checking account with them.
Open a checking account.
And how much do you want to put in there? Does it matter?
It kind of matters. It's not a big factor, but if you can put a few grand, 20 if you're in a good position, like that, that helps. But you don't need to. I see great limits with only $500 in there.
Okay.
But more activity, more cash, longer it's opened, the better, for sure. You do want to have a relationship manager at Chase. They're not easy to get, but you want to get one.
Do you request them? Do you earn it by having enough cash there? I mean, how do you get a relationship manager?
At certain revenue levels, they'll assign you one.
Yeah.
And so you want to get to a point where they assign you a business relationship manager. That's how you get the high limits. The only negative on going for Chase first, if you get the card, $50K card, you max it out. That's one of the few cards that reports to the business credit bureaus, which is Experian Small Business. And so not all business cards report there, but Chase is one of them. And so if you want to get Chase, max it out, and then get funding later, if the later banks pull from Experian Small Business, they're going to see that max out Chase card. And so if you're...
And small business credit more or less works the same way as personal. If they see a high maxed out credit card, that's going to hurt you in getting approved for another one.
There's 3 business credit bureaus, Dun & Bradstreet, Experian Small Business, and Equifax Small Business. So some banks don't pull either of them. Some just pull from Dun & Bradstreet, like U.S. Bank.
D&B still around?
Still around.
What,
yeah.
You basically buy your score.
Yeah, exactly.
That's
hilarious. You can buy cheap trade lines and get 3, and then you get an 80 score, and that helps for sure. Okay. But it's just playing the game.
I can't believe that's still around.
Yeah. Huh. But if the bank pulls from Experian Small Business, like Goldman Sachs does, they're going to see that Chase card. And so just understand that if you want the Chase card, you're just going to max it out, then it could have a negative effect.
So why do you like going for it first? It just has the highest bang for your buck and has the best likelihood
kind of like the
of
best
being
return
approved?
on your time.
Okay.
To get a good limit.
But you're going into it, you may be limited if you max it out.
And can't pay it down.
Right. So maybe you wait.
Maybe you wait, yeah.
And then get another one.
Yeah.
Okay.
So when I look at...
Chase would be your number one.
Yeah, it's just the biggest potential limit for sure. If you look at Bank of America and don't have a banking relationship with them for at least 1 or 2 months, more than just opening a bank account with like $500 in it. You want more. If you have that relationship, I'd go for Bank of America. If you have nothing there or like minimal, I'd just skip them for now. U.S. Bank, I'd put pretty high on the list. U.S. Bank, the seasoning liquidity in the bank account is not crucial, but more of like a snapshot of the money in the account at the time. So if you can just drop 10, 20K in real quick, do the application, and just pull the money out after and do whatever with it, that really helps right there. Just that snapshot of liquidity at U.S. Bank. Having a business checking account at U.S. Bank definitely helps. If you're in a state where there's Truist, like Florida, a lot of the Southeast has Truist Bank. That's a great bank, and you can do 2 25K credit cards on back-to-back applications. And so you can just do that over the phone, call the Truist Business Department, go into the branch, apply for one, wait for the credit approval, most likely 15 to 25K, and then apply for the second 0% card. So hopefully you get 25 to 50 grand just at Truist alone. Another one would be Elon Financial. And so Elon Financial it's the third-party underwriter of a lot of the credit unions. And they actually, they're affiliated with U.S. Bank. But my point is, a lot of the small credit unions you see around, if you go and see if they have business credit cards, you'll see they're tied to Elon.
Yeah.
And so I'd cap it at two cards that are issued by Elon.
So does this apply the same way as the personal, where you don't want to apply for too many too soon? Are you seasoning this, or can you kind of go hard on it?
So you can go pretty hard, but the only thing that limits you is the amount of inquiries you have. Because on any credit application, personal or business, you're most likely getting a hard inquiry on your personal report.
Yep.
Some banks will only do a soft pull, like PNC, Goldman Sachs, sometimes American Express. It's only a soft pull. So you won't get that hard inquiry. So it literally doesn't affect your personal credit.
So for those who don't understand, what's the difference between a soft pull and a hard pull?
So a hard inquiry is when you look on your credit report, and hard inquiries negatively affect your credit score. It's a small percentage of your score, but getting more of these affects your score. And it also signals to banks that this person has been seeking credit.
Yep.
And so if you have 3 in a 6-month period on Experian, and now Chase is pulling Experian, and they see you have 3 hard inquiries, they can see that you've just sought credit 3 times.
And from who, right?
And from who. So they can kind of see like, okay, this person kind of, in their eyes, looks desperate. Like if you're asking all the banks for money, it's like, okay, this guy's might be up to something. It looks less risky if there's no inquiries.
Yep.
A soft pull is when they can look at information on your credit report, but it doesn't show on your credit report as a hard inquiry. So it doesn't affect your report at all. So a soft pull is great. So American Express does soft pulls if you already have an Amex account. PNC as well, regional bank. and Goldman Sachs, which is all 48 states.
So the rule applies the same there. You can go pretty hard. Just know that the more inquiries you have, you're going to start slowing down your approvals because they're going to start seeing you're looking for a lot of credit. So you would still stagger it some.
Correct. And so to take the strategy even farther, it's very helpful to know what bank is going to pull from what bureaus. And so I have several hundred screenshots from people's credit reports based on the state. So like, okay, cool. If you live in Florida, look in our Florida folder. Here's 30 screenshots from Florida credit reports, and you can see that Chase pulls from Experian and TransUnion. PNC pulls from, was actually a soft pull. TD, I forgot what TD is, but basically through these screenshots of Florida, because it depends on the state. Chase could pull from a different bureau in California than it does in Florida. And so by looking at these screenshots, you can see what bureau the bank is going to pull from. And so why that's significant is if you have 6 inquiries on Experian right now, you don't want to have any banks pull from Experian because you're probably going to get denied. If you have collections only reporting to Experian, freeze Experian and then find banks that will pull from Equifax or TransUnion.
Off the top of your head, who does Equifax and not Experian?
PNC, Goldman Sachs, but those are both soft pulls, but they do look at Equifax. Citi a lot of times looks at Equifax, but out of the 3, it's the least pulled bureau. But Goldman Sachs, PNC, and Citi. Truist.
Experian is the most pulled, right?
It is.
Yeah.
Truist as well will pull from Equifax. That's all off the top of my head, but most pull from Experian. So it's really crucial to keep a good score there.
So I love this topic, and I was excited to bring you on because cash flow is an important part to any small business. And you said this twice already in our podcast, or maybe one before we got on. We're just not taught financial literacy. We're not taught how to play the game well.
By design.
Yeah, that may very well be true. And that frustrates me. And so I think being able to educate people to make better decisions and figure out that, like you said, is a tool. It can be a dangerous one, especially if you think it's cash and you've earned it, not that it's credit to be paid back. But having it, as you pointed out, early business, you lost out on millions of dollars, you said, and just based on what you're saying, that makes sense. And then a business that was acquired by another business, part of the reason you were able to do it is because you were able to leverage and put yourself in a better position, and you had a nice little exit there. And so this is an important skill set to learn, and it's we're not learned. The American consumer is fleeced over and over and over again. We're not educated on how to manage credit, how to deal with credit, how to manage our credit reports, why they're important, and then how to use credit to fund our small business. And so you have 3,000 entrepreneurs now who have either taken or are taking your classes and get support by you. Can you tell us any of your kind of success stories, the ones you're most proud of, and how you've been able to impact or change people's lives with it?
Yeah, absolutely. And I do think it's by design where they don't teach this stuff.
Yeah, I hope you're wrong, but there's a lot of good reasons to believe you're right.
I think a lot is by design. I think bad health is by design.
Unfortunately, I think you're right about that.
We can go on a huge side note there, but we won't.
It's what makes money.
Yeah.
Right? Just follow the money.
For sure. I mean, I studied business at University of Washington.
Did you graduate?
Yeah.
I went through I was going to do their SISB program, and I passed because the lady looked at me in the eyes and said, when you get out, you'll be 3 to 5 years behind the real world. And I was very naive. I corrected her, and I said, you mean ahead, right? Silly that I would have thought that now. But she was like, oh, no, it's worse in other universities. I'm like, I'm going to go $60,000 in debt to be behind the real world. So I pivoted. I ended up not completing and just went into the business world, got my education there.
Good. I think that's a great thing. I think really university really taught me how to teach myself, how to have discipline with like figuring something out yourself.
How so?
Like assigning you certain projects, and then, you want to get a good grade. So you basically have to go study in the library and get this project done, which sometimes it takes 6 consecutive hours focusing hard on this specific thing. And so I think that the discipline I learned from just sitting in the library, figuring things out, getting the work done, making the reports, all that stuff, I think that was very beneficial. And also the group projects I thought was really cool. And one class I always remember, well, operations was cool to think about cutting costs and things like that. But there was this one class, and I'll go back to your original question, it was about making deals, like licensing deals. And basically you switched the deal you were working on 2 times in the quarter. And so you're working on this deal, this hypothetical deal, and then you get to the the point where you move to a different deal and you pass the one on to someone else, and then you take on a new deal that someone else started. And that can be so applicable in real life, because when you start working on something, maybe in a job opportunity, someone else started that deal, that communication, but you're now taking it over. And so to think about, or having that experience of like, going into a new deal that someone else started, or wrapping up a deal, so you're going to move on to something else, and giving that previous communication to someone else. So that was pretty cool. But to go back to your question on success stories, there was this one individual, forgot his name, but he was opening a chiropractic practice, and like normal people, or kind of a business loan. He's like, oh, I need a loan from a business. Let me just get a business loan. Go down to the bank, and it was a newer business, and they said, no, you're a new business. We can't give you a business loan. Where's the business plan? Where's the financials? Where's all this stuff? He's like, I don't have it. And he didn't get access to the money through the business loan, joined Credit Stacking. We helped him get, I think it was $90,000, 0% for 12 to 18 months. And he was able to use that money to start his chiropractic practice.
And a business loan, you would still have a personal inquiry.
Yeah.
Right? You're not getting out of that.
And you're paying interest.
And you're paying interest. So
they're hard to get.
Yeah.
And you need to show the financials.
Yeah. That's
and
wild.
when you go to business school,
you're not getting 0%. An SBA loan, you're not getting 0%. There's a product I'm not aware of. But
like when I was studying at business school at University of Washington, zero talk about credit, zero talk about business funding. That's debatably one of the most important things in business, is to be able to raise money, get access to money.
There was predatory lending practices that got hammered when I was in college, because the credit card companies, specifically one, would sit in the quad and essentially hand out credit cards to kids that were coming right out of getting grants. And they would treat it like it was scholarship money. So they didn't even realize they were going into debt, and they thought they had this cash, and then they ended up with a load of debt coming out of college on top of their
it really pisses me off.
Me too.
I checked my credit report for the first time when I was 26 years old.
That's the first time you had looked at it?
You're like, first time I looked at it.
You're probably not alone.
It's ridiculous.
Curious to know how many people.
It was actually pretty good, because I never missed a late payment. So I was able to get approved for some of the top travel cards, like the Chase Sapphire Reserve, and I was just kind of, with my common sense and not missing payments, and it was an okay profile. But it's just ridiculous that they don't teach this stuff. And that just fuels my passion to educate people. Like, I was 26 and an entrepreneur, and I never looked at my credit. And my dad's an entrepreneur. Like, I have business people around me growing up, and that support. I was, influenced to go to business school, things like that, or get a business degree. But it's just crazy. So it just fuels my passion. And then I met someone at WealthCon, actually, which you talked about. And he was a credit stacker in my program. He saw me. He's like, oh, Jack, I didn't know you were going to be here. So we caught up, this dude from Ukraine, and he said he got approved for, it was something like 150, 200 grand, 0%. He used that money into his e-commerce business. He has a Shopify store, made a good amount of money on that business, and then used the profits from that to, one, of course, pay off the card, but then two, start investing in real estate.
I love it.
And there was this woman on my coaching call 2 weeks ago. I think her name was Amber. She, I think, said something like 350 grand that she used in her real estate investing. I think she was doing flips. She came on the call in front of over 50 people and was basically thanking me. And she was like, I'm not trying to get emotional, but she was getting emotional. She's like, thank you so much for changing my life completely and changing my family's life completely. The money you helped me get approved for has done wonders for my life. And it was just like a chilling, I was so grateful for that.
Find your purpose.
Yeah.
Right? You're able to help people. I love this.
There's dozens, hundreds.
What's next for you? We said you'd like to travel a lot. Every time I talk to you, I feel like you're heading out. You just came back from somewhere crazy or going somewhere crazy.
Yeah.
You're going skydiving in Venezuela.
Yeah.
Going to Colombia, going to Argentina, having a blast.
Yeah.
When you kind of see yourself 3 to 5 years from now, where are you? How are you positioned?
In 3 to 5 years, I see myself with a large piece of property in a state like Utah, where I can build out an epic compound, ranch style, dirt bike track, gun range, horses, snowmobiles, that type of stuff. And I believe when you have your vision crystal clear on what you want, it's become so much easier to stay focused on exactly that vision.
Yes.
Someone has to go hang out. Someone has to go to this party. Someone has, okay, does that go towards my clear vision?
Beautiful.
No. So I'm not doing it. And I think it's not easy to craft a clear vision. So I do recommend to ask yourself on a daily, weekly, monthly basis, what is that vision? It does take some time to figure out, but once you start to develop it, it becomes so much easier to stay hyper-focused. So that's what I'm hyper-focused on. I also love building like life skills like shooting. I'm getting into Muay Thai training.
Nice.
Things like that. But really on the business, I know I'm committed on funding. When you study billionaires, they say they did the same thing for 40, 50, 60 years. So that is what I'm going to do in funding. I've been in it for over 4 years, and I have no plan to get out of it. There's opportunities everywhere. Come invest in real estate with me. I could probably do good in real estate, but I am best at funding, and I'm going to stick with funding. I have multiple offers in the funding niche, but I do recommend for people, once you really find your groove, like stick with it.
You're 100% correct.
And you just move so much more efficiently. Similar to compound interest, there's compound effort.
Oh,
and so like when I'm
beautiful.
hiring people or putting certain things in place, making new partnerships, it's like boom, boom, boom. Because I've been doing it and I'm in the same industry. So I plan on staying in this industry and I'm committed to it.
Yeah,
and I encourage other people to stay in the groove and really put in the work long term.
Yeah, it's brilliant. There's a few things you said there that I want to come back to. Clarity is power. It's easy to tell how clear somebody's vision is by how easy they say no to things that don't align with it.
Yes.
Right? And you brought up a second point. There's lots of ways to make money, but the surest way to make sure you don't make any is spread yourself too thin, trying to do too many things, or chasing the bright, shiny object, which you'll see. Like people will bounce around. I call them entrepreneurs. They bounce from one industry to the next, and they're constantly chasing something, whereas you said it, and you're right. Statistically, you're more likely to build crazy wealth over time by staying in your lane and being committed to your industry. So finding something that you love, that you do really well at, you excel at, and just keep the blinders on and stay focused on that.
Yeah, I fully agree, Sebastian. And I think to go off your previous question kind of and mention about skydiving, traveling, things like that, as we previously talked about before we were rolling, I think it's so important to have recreational activities, sports and hobbies that you can focus on and try really hard at, and then you see the progression in that hobby or sport. And when you put in hard work on something and you get good results and improvement, it's contagious. Yeah. It rolls into other things of your life. And so I'm big on extreme sports and just physical activity in general, and I really encourage other people to do similar things. Like find hobbies, find things to progress at, whether it just be, reading or journaling. I mean, like there's so many things. I think I should do it a little bit more than that, but find those things where there's like tangible progression and it just becomes addictive, and it rolls over to other things in life. And so that's for me, it's skydiving. I solo skydive, have almost 450 jumps, going down to Venezuela to jump over these beautiful islands. And I've been 2 times before, and I've worked really hard training in the wind tunnel and training in the sky for this big, not event, or kind of an event. Like I've been wanting to do this for so long, and now I'm going to do it. And so to have that,
I'm pumped for you. That's awesome.
To have that, like once I do it and just have that, the feeling of like all that work went into this experience will feel so good. Yeah. It's already felt so good. And then one other thing I wanted to mention when we were kind of talking about, how do you stay organized? How do we make sure we're putting the credit to good use? How do we make sure this is a good tool? And I think one thing that a lot of entrepreneurs don't do is really good accounting. I think it's super important, and I've kind of took it for granted. My dad was an accountant, or he studied accounting, had a software programming company, but I've always kind of understood accounting to a degree. And I think when people don't do monthly accounting and don't study their profit and loss statement on a monthly basis, it becomes way harder to be profitable.
Yes.
When you're looking at a P&L.
And to manage debt.
For sure. When you're looking at a P&L and realizing you spent X% on advertising, or X% on this employee, or X% on food and dining, like you really figure out, okay, how do I increase revenue and how do I minimize these expenses to increase the bottom line? And for early stage investors, it's very easy to just not do the accounting, but I highly encourage do the accounting. It takes a little bit of time to set up, $100 to $200 to pay an accountant to finalize everything, and just study that P&L. every single month.
Do you have a platform you like for that?
QuickBooks.
Yep.
I'm not married to it, but I've been using it and it works okay. And the reports, look good.
Yep.
But one thing I've been doing for personal finance stuff is an app called Monarch Money. And it basically just syncs all my personal credit cards and bank accounts into one app. And so I can see all the transactions just on one app on my personal cards. And you can create rules, just like in QuickBooks, create rules so it categorizes certain things in categories where it's helpful to then look at that category. So I spent this much on skydiving this month, this much on dining, this much on rideshare. So to have all of the transactions to come into one app, super helpful.
Why Monarch Money? There's a lot of apps out there that do that.
I don't know. I had heard Mint was good, but Mint went they stopped doing Mint.
Yep.
Did a little bit of research, came across Monarch Money, and so far I love it.
Cool.
For sure. And even if you only have like 3 or 4 credit cards, it's still 3 to 4 different places you need to look.
Yeah, totally.
And then with Monarch, it shows you your income and then how much you're spending and then ultimately how much you're saving.
Yep.
And so it's really been cool. I recommend it.
Very cool. Well, wrapping this up, I have a few rapid fire questions for you. When you look at the books that have had the biggest impact in your life, which one is it?
Think and Grow Rich.
Solid. Napoleon Hill.
Napoleon Hill, yeah. Think and Grow Rich. That's like the Bible of business.
I agree with you.
I've read it a few times. I should read it once a year.
Yeah,
for sure.
I have it sitting on my desk over there. The very first copy I was ever given. It's all yellow and
I need to read it again.
Aged, but I was 11, and this old dude handed it to me and said, "You should read this."
Incredible. I think that is the book they should require to read in school.
That's
another reason why I think
it's on a list
by design. They teach you how to read. They make you read how to mock a mockingbird or whatever.
Yeah. What is the book? Why is it not coming to me now? How to Kill a Mockingbird. Yeah.
It's like, I hated reading because they made us read the books like that. It wasn't until I read How to Win Friends and Influence People.
Also a great book.
Forgot the author.
Dale Carnegie.
Yes.
Yeah.
Just a phenomenal book. Like so fundamental, but so powerful. That was the first book I read that changed my outlook on reading.
What book do you find yourself recommending more than any other?
Think and Grow Rich for sure.
Okay. Yep.
Yeah.
Solid. If you could have a billboard in downtown LA and it could say anything on it, what would it say?
Build your credit. Build strong credit.
I love it.
You can do so much more with it in your business and your personal life. We didn't even touch, and maybe we can touch right now on the credit cards the credit card points that come with these business credit cards, or really all credit cards. It's incredible. Like I've flown the best first class flights around the world, incredible first class suites with bars on the planes, double decker planes, showers on the planes by just using credit card points.
That's incredible.
And so even if you don't like have these crazy businesses, having good credit can help you get the best travel cards. So you get the big sign-up bonuses, 100,000 point sign-up bonus when you spend a couple grand on the card. When you're using your Amex Gold, you're getting 4x points on dining instead of the debit card that gives you no points. And then when you generate points at banks that have transferable bank points, like the 4 banks that have transferable points is Chase, American Express, Citi, and Capital One. So why this is significant is because you can transfer the points from the bank to an airliner or to a hotel. Mm-hmm. But U.S. Bank, Wells Fargo, and a couple other basic ones, you can't transfer the points out. So you're stuck at a fixed 1-to-1 value on your points. So
another reason why you probably don't recommend them.
That's another reason. I do, yeah. So using your Chase cards and Amex cards, you get all these great points. And so I do recommend to think about where are you spending your money? Is it dining? Is it travel? Look at those categories and then making sure you have a card that gives you the most points per dollar spent. People are using debit cards. I mean, that is just tough.
Yeah.
That is a huge opportunity cost, even just free travel.
You're missing out on.
You're missing out. But what I'll say is when you use the points in the portal at Chase or American Express, you're using them at basically a 1-to-1 ratio of 1 cent per point. When you find a good deal with an airline, specifically on award travel, which is when you use points for it, and you can transfer them to the airliner, you can get up to a 20x multiple on your points.
You go from
like
100
20
to 1
cents.
to 20 to 1.
Yeah, 20 cents per point instead of 1 cent per point.
Oh,
and
wow.
so it's crazy.
Oh, wow.
It's crazy. Like you can easily get 5 to 10. Or 5 is easy, 10 is like pro, and 20 is like
Do you use
godly.
an app that's alerting you of those conversions? Because I'm sure they fluctuate all the time, or are you just checking in?
Yeah, so there's several tools. on how to do this. One newsletter I would recommend the viewers to subscribe to. I think it's $10 a month or $100 a month, or it's something not that much, but it's very valuable. It's called Straight to the Points, and you put in your ideal airports, and it sends you a newsletter a few times a week, and you can set your preferences and everything. But it basically shows you this flight is available for only 70,000 points. I'm talking about first class flight from like LA to Tokyo or LA to, Dubai. That one might be over 100,000, but it shows incredible deals.
Wow.
Like a lot of times when you book a first class flight in the Amex portal, when you don't transfer them, you do it in the portal, it will cost several hundreds of thousands of dollars, $500,000, 700,000 points. I won't book a first class flight if it's not under 120,000 points. Ideally like 70, which is super, super doable. And so Straight to the Points is the newsletter. It will email you to show you these deals. It shows you what bank points you need, Amex, Citi, Capital One, Chase, and then you need to transfer it to this specific airline program, and then you can book it. It's next level.
Sick.
And when you start traveling first class, it's very hard to go back.
Yes.
And when you're savvy with credit card points and credit and the right cards and business, not even with business, but the right cards, you generate so much points, or you can. And then when you know how to use the points, it's just a different game. Like I've been doing the first class travel for several years now, and I've flown the sickest first class flights, and I would never, in the short term, ever spend that much cash on these flights.
Totally.
I like a good deal.
Yep.
I'm frugal. I like a good deal. And when I can get free credit card points and book these incredible first class seats, it's a game changer. And so I highly recommend people get the best travel cards, optimize your spend so you're using the right card based on the transaction, and then subscribe to Straight to the Points. And that will be a good starter to seeing what's possible.
We'll add it to the show notes. People can find it.
Yeah, and people are probably like 70,000 for first class. I spent 70,000 on a round trip economy in the States.
Yeah.
Like 70,000 points for like it. So on a 1-to-1 ratio, that's $700. I'm talking about using those points and getting a $7,000 flight.
Yeah, that's
if
incredible.
not more. So that's a 10x multiple there.
Kind of pivoting and wrapping us up today.
Yep.
One last question. What do you hold as true or sacred that would be considered unpopular or controversial?
Say it one more time.
What do you hold as true or sacred that is considered controversial or unpopular?
That guns are a good thing in this country.
You believe they are, or you believe they aren't?
I believe they are.
Okay, cool. I love it. Jack, where can people find you?
You can find me on Instagram, Jack McColl, or creditstacking.com if anyone is interested to learn about credit, take it to the next level. But my Instagram is Jack McColl. And really appreciate it, Sebastian. Appreciate you guys for tuning in today. Hopefully you got some good value. If you have any questions on anything, feel free to shoot me a DM, and happy to get back to you.
Dude, this was awesome. I appreciate it, Jack.
Really appreciate it.
Thank you.